Today we will be talking about the differences between hard money versus private money lenders. I see this question all the time in a lot of social media groups, even in person. People seem to be very confused what the difference between a hard money lender and a private money lender is. My name is Edwin Epperson. I am with Blue Bay Capital, and today we are helping real estate investors like yourself make wiser, more informed decisions. So hard money lender versus private lender, which should you choose? Well, let's take a look at two examples. We've got hard money Hal, and we've got private lender Penny. So private lender Penny and hard money Hal, these are typically what you see as far as options out there. So let's take a look at hard money Hal. So hard money Hal, normally this is an institution or a company. They are pretty much professional. They've got a bunch of advertising. They're out there. They're marketing for borrowers. They probably have a very large advertising budgets. Normally they are in multiple states at a minimum. Many times they are nationwide. So you've got these hard money lenders that are out there. They can do loans in a lot of different states. As well as they have multiple buckets they can lend from. So that includes correspondent lines, lines of credit, mortgage funds, whatever that looks like. A hard money broker, a hard money lender actually has quite a bit of access to capital. Now compare that to private lender Penny. So private lender Penny is more than likely an individual. They're more personable. They are going to be basing their decision to loan you, the real estate investor, capital based on, honestly, whether they like you, whether they get along with you, whether they trust you. These are all come into play, and the fact that they are relationship based. Private lender Penny is not necessarily going to be concerned about your credit score. They're not going to be concerned about a lot of other factors that hard money Hal may be concerned about. Because they're relationship based, they're not going to advertise. I cannot stress this enough for you real estate investors going on to Facebook groups and LinkedIn groups and communities, meetup groups online, anything that is based online, and you're asking for private lenders. Private lenders, a true private lender, an individual who has money that's sitting in a self-directed IRA, a solo 401k, a QRP, a UIL, you name it, it's out there. They are not going on social media to find people to loan them money. So for those of you who are going on to social media and you're asking for, I'm looking for a private lender, the only people that you're going to come across, more than likely, are going to be scam artists. People that are either trying to waste your time and or get money from you. So just let's put that out front. If you're looking for this type of private lender, the individual, you will not find them on social media. Plain and simple, it's as cut and dry as possible. You will not find a wealthy individual advertising online that they have money to loan. Not going to happen. You will find them through personal connections. Where you meet them, that's a conversation for a different day. But finding those people through your personal network, through making new connections, that's how that will happen, okay? They also lend their own capital. Private lender Penny, if they have $500,000, guess what they've got? $500,000. If they've got $100,000, guess what they have? $100,000. They have their money, and that's all they're interested in lending. They're not running a business. They're not interested in being a hard money lender. They are simply a private individual. So there are benefits and pros to each of those. Let's take a look at these. So let's take a look at hard money Hal. Here's some of the things that they will have, as well as what you'll want to be aware of. So they're professional. They're going to help you reduce your project risk. They have the systems in place. They have the processes in place. They will help you look and analyze at projects through the lens that they look at, and therefore reduce the risk to you as a real estate investor. Because they're a business, they're verifiable and systems oriented. They are very much going to be looking at helping you build, hopefully, as well as just looking at implementing their own systems and processes into your deal. This will help with communication. This is going to help streamline your process and hopefully get you to close faster than going through a bank. They have a lot of different options because Hard Money Hal has many connections with different buckets of capital. They have also a lot of loan programs. They can probably do single family rehabs. They can do single family bridge loans. They can do single family rentals. They can probably have within the rental space 3-year, 5-year interest only and balloon programs. They could do a 30-year balloon program. They could do, a 30-year loan program fully amortized. They could do multifamily. They could do commercial. So again, they have many, many different options. And if you're working with a hard money lender, because they have the options, they can help you grow and scale your business and take on unique and new projects. Because they have that access to capital, they are able to help you scale. They are able to help you grow. And so that is a huge benefit of working with Hard Money Hal. Now, here's some of the things that you'll want to be aware of. They are professional. Therefore, there is an increased time to close. A hard money lender probably is not going to be able to close a deal with you in a couple of days. They are going to have their systems and processes in place. They're going to take their time to make sure that the asset that they're collateralizing actually makes sense. Because they are operating a business, this increases the cost of their funding. They are not on there just loaning out the retirement funds. This is a business for them. So they have business operating costs. They have to pay for their employees. They have to put the lights on at the office. They have to pay for all their systems and processes that they have in place. So because they're operating a business, the cost of using Hard Money Hal is going to be a little bit higher. Because they have a lot of options, that includes a lot more paperwork. Just be aware, if you're working with Hard Money Hal, you will be filling out quite a bit more paperwork than if you worked with your buddy Joe down the street and he's going to loan you a few $100,000 out of his self-directed IRA. Also, because of their scalability or their access to capital, it's going to cost you more. It's going to increase the cost of capital to you. All right, so let's take a look at Private Lender Penny. Well, Private Lender Penny is an individual, so it significantly reduces the time to close. Private lenders, again, this is based on relationships. Once you establish a relationship and somebody really trusts you and they like you and they really want to get behind you, you could have a private lender ready to close on a deal that you bring to them within a matter of days. That's significantly different than working with Hard Money Hal and way more different than working with the bank. Here's another thing. Because they are really only interested in passive income. That's that monthly check that you write to them for the cost of borrowing their capital. In the grand scheme of things, because they're not running a business, well, the cost of capital is going to be reduced. It's probably going to be some of the cheapest money that you have access to. Relationships. Because they are very relationally oriented, there's going to be a lot fewer requirements for the quote-unquote application. You may not even have to fill out a loan application. It could be as simple as you sending to Private Lender Penny an email, hey, I've got a property 123 Main Street, anywhere, Florida. They look it up on Zillow or Trulia or whatever platform they use, and then writing back to you, okay, I like that deal. This is what I can do. You shake hands on it and you literally move to close. That's how working with a private lender can be. Now, here's some of the things that you'll want to be aware of if you're working with a Private Lender Penny. They have capital limitations. They have limited funds, guys. They do not have an unlimited bank account. They don't have all these buckets. Again, if they've got $100,000, guess what? That's all they've got. And the disadvantage to that is if you get a great deal that you really want them to loan on, but they don't have the capital available, you're sort of two sheets to the wind in that regards. So just be aware of when you're working with Private Lender Pennies, you need to have a lot of them on call ready to fund a deal. It takes a lot of time to build that network. Again, because they're personable, they may or may not be experienced in real estate investing, especially if this is somebody who is, they've got their own career, they're working, they've got money sitting in a self-directed IRA. They're really looking to you to be the expert and the professional. Because they are very personable, they are relationship oriented. They're probably not going to have systems in place to help mitigate risk. Therefore, it does increase risk not only for them, but also for you. So just be aware of that. Because they're trust-based, that trust can easily be shaken. I cannot tell you how many times I have heard of horror stories from real estate investors. They built a great relationship with a private lender Penny. The private lender Penny fully trusted them. They were able to present their game plan, their business plan to Private Lender Penny. They went ahead and invested $100,000 of their retirement account into a deal. And all of a sudden, the real estate investor comes into problem. Maybe there was, unforeseen expense, or maybe the project took longer than planned. And all of a sudden, private lender Penny, their trust is shaken. And guess what? Once you shake private lender Penny's trust, you will have a very hard time of earning it back, if ever. So just be aware of that. Private lender Pennies are going to be very, very easily shaken when things don't go right on a deal. And also that leads into the reputation. When you're dealing with private lender Pennies, you really want to make sure that you have the experience and the ability to adequately approach situations and be able to treat private lender Penny right. What I see is that private lender Penny expects to make an X amount of return, and the deal goes long, and all of a sudden the real estate investor is having problems paying that basic interest rate because the project didn't go as planned. So just be aware that if you ruin that reputation, if you shake that trust, you've not just shaken the trust of that one lender, but you've probably shaken the trust of all the other contacts that they talk with. So there's a reputation. They're typically very involved in the community, and your name, whether good or bad, and regardless of the facts of the deal, it's really how private lender Penny feels that they were treated in working with you. That can get around very quickly. So what about the third door? If you remember at the beginning of this presentation, there were 3 doors. Hard Money Hal was on the left, private lender Penny was on the right. But what about that middle door? Well, this is this is where we fall in, Blue Bay Capital. And we are what I would consider a hybrid. We're a hybrid between the Hard Money Hals and the private lender Pennies. Let me explain. So with Blue Bay Capital, we are individual. It's my capital, as well as we're operating a business. So this is my capital. I've got several capital investors that trust me, and I loan our money out to real estate investors like yourself. So I am building a business. So I've got the systems and the processes down, but I'm also loaning my own capital. So there's a relationship aspect along with the processes. So I'm very selective with who I work with. The more that we work together, the faster and the easier it becomes. Because I integrate that relationship aspect into my business. As well as I am personable, is my own capital as well as others. So because of that, I have a bigger bucket than just working only with a private lender Penny. When you work with us, you have access not only to our capital, but other private capital providers like other private lender Pennies. And so that allows us to offer you scalability as well as the relationship aspect of the business. Now, some of the things that you'll want to also be aware of is because we're experienced, that allows us to reduce the risk to you as a client, as well as help you make wiser decisions. We're in this for the long haul. We're in this for a long-term relationship. We want to come alongside of you and help you be successful. This is not just a loan to us. You are not just another number. You are an investor who we want to dedicate time, energy, and effort towards to help you grow a successful business. Now, here's some of the things that you will want to be aware of when working with us. Because we are individual plus a business, there are slightly higher costs than, let's say, a true private lender like private lender Penny. But again, we also have access to more capital. So you get sort of a nice hybrid between the two of access to capital and the cost of that. Credit. While a credit score will not determine fundability, we still pull a credit score to verify the history. So we get this often a lot. Well, if you don't loan based on credit, why do you have to pull a credit score? Well, we pull the credit score to make sure that what you're telling us is the truth. Trust, but verify. As well as we want to see what the payment history is. Are you able to pay your bills to date? If you can't pay your bills today, then the likelihood of us giving you a loan and you being able to pay our bill, our loan is going to be significantly decreased if you can't pay simple bills that you have today. Experience. Because we have more knowledge and oversight on a project than a true private lender, but we also have more flexibility than a hard money lender. So with our knowledge and our experience, we can help guide you. We can help keep you on the right side of a project. We can help point out some red flags that you'll want to be aware of and honestly help you steer clear of a bad project. That's what makes us different than a hard money lender. A hard money lender is simply going to look at, hey, does the numbers make sense to me? Yes or no? Am I going to make money? Yes or no? Okay, we'll do the deal. We want you to be successful. Even if the numbers make sense, but maybe it's a deal that you've not had experience in. We want to help guide you in that. We want to help give you some suggestions, advice, maybe connect you with some additional team members that can help make that project successful for you. So this has been the differences between hard money lenders and private money lenders. My name is Edwin Epperson with Blue Bay Capital. We are a Florida private lender. You can reach out and connect with us on Facebook. You can reach out and find me on LinkedIn. I'm very active on both platforms. And of course, you can always go to our website, bbcfunding.com, to submit a loan application and find out how to work with us. Look forward to talking with you. I look forward to hopefully helping you grow and build your family's generational wealth. And we look forward to doing more of these training videos and educational videos for you in the future. If you've got a topic of conversation that you'd like us to dive into, please let me know. Reach out to us, and we will get that on the schedule.